Hello everyone and welcome back to another video. My name's Sam and today we'll be sharing the best ways to invest in the stock market, including how much budget you'll need, which broker types to choose, and other basics of investing in stocks you need to get started. Before we begin, feel free to comment down below with any questions or insights on this topic, and make sure to stick around till the end of the video so that you don't miss out on anything important. Alright, let's begin. Step 1 to investing in stocks is setting clear and specific financial goals. It's important to reflect on what you want to achieve to align your investments with your objectives. These goals can vary depending on your life stage and aspirations. For example, if you're a younger investor, your focus might be on growth and long-term wealth accumulation. On the other hand, if you're closer to retirement, your priorities might shift towards generating income and preserving capital. By identifying your goals, you can make informed investment decisions that are in line with your desired outcomes. The more precise you can be about your goals, the easier it will be to sort out the best means to get you there. Suppose you want to save for retirement. Instead of setting general goals such as save for when I'm older or I want to be worry-free financially one day, go after specific objectives, like accumulate $500,000 in my retirement fund by a certain age. Second step is to determine how much you can afford to invest. It's important not to be discouraged if your funds are limited, as investing is a long-term journey. Start by looking at your sources of income, including any investment options or matching funds offered by your employer. Additionally, ensure you have an emergency fund in place to cover major expenses. Prioritize paying off high-interest debts before investing, as the returns from stocks may not outweigh the costs of interest. Set a budget based on your financial assessment and determine how much money you can comfortably allocate to stocks without compromising your current or future expenses. Remember to only invest money you can afford to lose, and never put yourself in a financially vulnerable position. Investing should be approached responsibly. Next step is to understand your tolerances for risk. This would involve assessing your comfort level with the uncertainties of the stock market, considering factors such as your life stage, financial goals, and ability to handle potential losses. By determining your risk tolerance, you can develop an investment strategy that aligns with your objectives and provides peace of mind. This self-assessment helps you choose the appropriate stocks for your portfolio and make informed decisions during market fluctuations. It's important to find the right balance between stability and potential returns based on your preferences and financial situation. Fourth step is to choose your trading style. Individuals have varying relationships with money, which influences their risk tolerance and investing styles. Some investors prefer an active role, closely analyzing their portfolios, while others choose a hands-off approach, trusting in long-term growth. Time constraints may also impact the level of involvement in trading. It's important to understand your investing style, which can evolve over time. Investing on your own allows for full control over investment choices, while working with a financial advisor or broker provides personalized advice and assistance in managing portfolios. Both approaches have their merits and can be tailored to individual preferences and goals. In step 5, you need to choose the type of investment account that suits your needs. Retirement accounts such as 401ks or IRAs offer tax benefits and are convenient if your employer offers a retirement plan. If you want more flexibility or you've maxed out your IRA contributions, a taxable brokerage account allows you to access a variety of investment options. For those interested in more flexible trading options, you might also consider trading stock CFDs. CFDs, or contracts for difference, allow you to speculate on the price movement of stocks without owning the underlying shares. This means you can potentially profit from rising and falling markets and take advantage of leverage. However, it's important to understand that CFD trading carries its own set of risks, including the possibility of losing more than your initial investment. Step 6 is to understand the costs involved. Traditionally, brokerage firms charged fees through trade commissions, account maintenance fees, and fees for additional services. However, the landscape has changed and now there are various fee structures to consider. Trading commissions can range from $2 to $10 per trade, and these fees can add up, impacting your portfolio's return. Maintenance fees may be charged to keep your account active. but they can sometimes be waived if your account balance is above a certain threshold. Some brokers also charge service fees for specific services, but these are often optional. Now, account minimum deposits have become less common, with many online brokers eliminating them to make investing more accessible. Next, you need to choose your broker. When choosing a broker, you have two main options: full-service brokers and discount brokers. Full-service brokers offer a wide range of financial services and personalized advice for various life events such as retirement planning and college planning. They typically charge higher fees, often a percentage of your transactions or assets under management, and may have minimum account size requirements starting at $25,000. On the other hand, discount brokers provide tools for selecting investments and placing orders. This type of broker usually has lower fees and may have no or low minimum deposit requirements. However, they may offer fewer trading options and lack the personalized approach of full-service brokers. The eighth step is to fund your new stock account. You'll need to provide your personal information to open the account, including your social security number, address, employment details, and financial situation. Once your account is open, you can link it to your bank account by entering your bank account number and routing number. This allows you to transfer funds from your bank account to your brokerage account, typically through an electronic funds transfer. Once the funds are in your account, you can start investing in stocks. Step 9 is to find the stocks you want to invest in. When picking stocks, it's important to approach it with a conservative mindset, especially for beginners. Look for stocks that have stability, a strong track record, and the potential for steady growth. Blue chip stocks of large, well-established companies with reliable performance can be a solid choice. Dividend stocks that regularly pay dividend provide a regular income and can be reinvested. Growth stocks in industries with long-term potential like technology or healthcare can offer outsized growth opportunities. Defensive stocks in industries that perform well during economic downturns, such as utilities or consumer goods, provide a buffer against market volatility. Step 10. Keep learning and learning. Investing in stocks is a continuous learning experience. Stay informed by reading reputable financial news, using stock simulators to practice risk-free trading, and learning about diversification. The more you know, the better decisions you can make and adapt to market changes. That should cover all the basics about how to start investing in stocks. Remember that everything comes with risk, so be wise with how and where you invest your hard-earned money. Don't forget to like this video and subscribe to our channel, and hey, since you've made it this far, here are 2 more videos that you might enjoy. I'll see you next time.